Laura Lau very kindly sticking with us for a second block. Now, we did get U.S. inflation numbers this week that were lower than had been expected. That reassured the market yesterday, although stocks under pressure today. Let's have a quick look, actually, at the North American benchmarks very quickly. You can see stocks slipping today, partially amid trade uncertainty. Laura, thank you so much for joining us. Give us your take on some of the big tech stocks. Start off with Oracle, if you would. That is a stock you guys own at Brompton.
Yes, we do own Oracle. And one thing we've seen is, despite DeepSeek, the AI names are still, doing well. And part of the reason is we do see this as a long-term trend. This, we think, is the next industrial revolution. It'll be like the internet. We think it'll be that revolutionary. And as a result, companies that play in that, build that infrastructure, such as Oracle, they have their cloud infrastructure, they have applications. So they're actually re-accelerating the growth, and they'll be part of the Stargate initiative with a lot of the other companies in the U.S. to build out AI infrastructure. Right.
So Oracle, you feel, could be a winner here, and NVIDIA, you feel will also participate?
Yeah. So NVIDIA, the big news out of NVIDIA is Jensen Huang has said that Europe, he believes that the infrastructure they built there will be 10 times in a number of years. And Europe, what we've seen is they like to have their data in the country.
Right.
And as a result, it means you've got to build data centers there. And if you're building them, you might as well build AI infrastructure. So I do believe AI has been largely a U.S. story, and then China with DeepSeek, and now I think increasingly global with Europe.
Laura, I wanted to get your take on an op-ed that appeared in the Globe today. It's by Ari Pandez of the University of Calgary's Haskayne School, and also Colin Deacon, a senator and former entrepreneur. They argue that the big banks' grip on the investment industry in Toronto now is creating stagnation. And also they claim that the big banks are conservative. They only seem to be interested in backing companies with physical assets, resource companies, or financials. And they argue it's led to a dearth of IPOs, for example, on the TSX. Is it time to scale back the big banks' grip on the investment market, do you think?
Well, I would tell you that, the investment banks in, the Canadian bank arms would love to have more IPOs. But, one thing we have seen that they don't really talk about the op-ed is that a lot of the investment advisors are now what we call fee-based rather than commission-based in the old days. Like the old days, you'd have those stockbrokers trade, they get, paid on these, IPOs. Well, now they're getting paid, whatever that management fee every year, and they're not really paid to take those risks and buy those IPOs. And we think that is part of the issue as well, because if they buy the IPO or not, they still get paid the same. So there's just been less demand we've seen for IPOs, period. And I think the other thing you have to think about that's not in the op-ed is demographics. People in Canada are getting older.
Right.
As you age, you typically take less risks, and IPOs typically do have more risk. You don't have that financial history. So I think there's a lot of that. And, the IPOs tend to be smaller names. And when you think about it, smaller names have underperformed in Canada and the United States, and around the world.
They get kind of orphaned, don't they? Big investors don't want to touch them because they're not liquid enough.
Yeah, so as a result, I don't think it's just a Canada issue. I think it's, around the world demographics, so it's larger than that. But certainly we do need a vibrant capital markets. I believe capital markets are here to support our companies, especially the smaller companies, get capital. And it's been harder and harder for those smaller companies to get that in the past number of years.
It's interesting. Jamie Dimon of JP Morgan has complained about the dearth of public companies in America, a similar phenomenon.
And you can also place some blame on the pension plans, where the pension plans have been largely going more private versus public in their asset allocation. So again, I think there are many culprits.
Yeah, I always think it's interesting that the big pension funds go in for these private investments, which of course are much less visible. You can't see how the investment is doing. It's sort of convenient for them.
And many of them outside of Canada as well. And of course, there's been some debate as well. Do we force them to invest more in Canada? But then, do the returns go down? So there's a lot of debate.
Yeah. You have a couple of ideas for us here. SGO, it's a European infrastructure name. I believe it trades in France. What attracts you to this one, Laura?
So, in this kind of market, you kind of take a step back and say, what themes do you see? No matter what, with tariffs, economic growth, what can still do well? So one theme we do see is European infrastructure. Two main things. At some point, the Ukraine-Russia war will be over, and then you have to rebuild Ukraine. So the other thing we see is Germany has basically committed to a big infrastructure package. So that's why it makes sense to invest in European infrastructure. And basically what Saint-Gobain does is it's building materials, windows, insulation, all that thing for, and they have a lot of their business in Europe. And then Europe is also greener, so things like insulation, better windows is still a theme going forward.
And your final idea, GE, and it's GE Aviation these days. It makes jet engines. And of course, we got that Boeing tragedy in India. The stock actually down a little bit today. Of course, we don't know anything, I don't think, about the cause of the crash. But generally, GE interesting you these days?
Yeah, so we don't know the cause of the crash.
No.
It could be the engine, because GE does make the engine for the 787, but it's likely not. It's a 12-year-old plane. So that's why we think the stock is down today. And of course, it's a risk-off day. But if you look at GE, they're a beneficiary of Airbus and Boeing's problems. So it's taking them longer to deliver planes. And a lot of those planes have GE engines in them. And they make money off that, but where they really make money is on the aftermarket service.
Right.
So they have a lot of planes in service now. The older the plane, so what's happening is if you can't get a new plane, you use the old planes longer. You need to use those engines longer.
Yes.
And that's where they make money. So Airbus and Boeing have like a 7 to 8 year backlog. So even if you want a new plane, it's very difficult to get. So you use your plane longer. And as a result, GE, their engines have a 3.5 to 4 year backlog.
That's interesting. Yeah, so slower production is actually good for GE, the engine maker.
Because they don't actually make much money off the initial sale to Boeing or Airbus, but they make money on the aftermarket.
Right. Sounds a bit like the auto business as well. It's a big part of the economic proposition.
Yes.
Laura, thank you very much indeed. Laura Lau of Brompton Group. She's Chief Investment Officer.